The first tick on the index is absolutely flat, the Nifty down about 20 odd points. The Nifty for now is holding up with a gain of about 30 odd points. The Nifty is right now in the green, up around 5 odd points.
We speak, markets are inching up. The Nifty is above that 18,200 mark. All in all, steady session. The dips were bought into, but the Nifty found it tough to conquer 18,250.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Ekta Batra. Here are the top stories for the day. The stock markets end with minor gains after financial stocks recover in late trade. Sensex gains over 120 points. Nifty moves back above 18,200 levels. Insurance companies surge while metal stocks see profit booking. Mid-sized banks perk up on strong growth in disbursals and deposits for the third quarter of the fiscal. However, CASA ratio worsens for most. The updates lift stocks of Federal, CSB, South Indian Bank and Karnataka Bank. The government eases rules for minimum shareholding of listed public sector enterprises, allows exemption for specified periods in cases of public interest. The exemption will remain valid even if the PSU is divested. Adani Enterprises will pay 48.65 rupees more for each share in NDTV bought under the open offer to match promoter transfer price. This takes the offer price to 342.65 rupees per share. Zomato slips after its CTO quits PSP Projects gains on being declared the lowest bidder for a 1,300 crore project, and Granules perks up on an alliance to make green molecule solutions. All right, well, let's also tell you what we have lined up on the show for you. It's a power-packed show as always. We'll get you expert opinion on the markets from Rana Gupta of Manulife Investment Management, Sridhar Sivaram of Enam Holdings. That's not all. In corporate opinion, Shree Cement's H.M. Bangur and Granule India's Krishna Prasad. They give us a scoop on their businesses. All right, but before we get to that, here's a quick look at the day's trading action. The Sensex gained over 120 points and the Nifty moved back above 18,200 as the markets ended the second trading session of 2023 in the green. A late rally in bank stocks aided the recovery on Dalal Street. Nigel's here with a wrap.
Well, that's right. It was a bit of a range-bound day of trade for the Nifty, but the Nifty Bank did outperform in trade. The Nifty, a couple of times, we tried to get past that 18,250 odd mark, but that was met with resistance. The advanced decline ratio, well, it ended in the positive trend. But if you look at the crisscross lines, by the time we wound up, well, those lines got closer to each other, telling you that the number of advancing stocks, they did move a little bit lower, while the number of declining stocks did increase as the day progressed. Banking updates did come in. And in fact, the sector is looking up. Those smaller banks did come in with a positive update. CSB Bank, Bank of Maharashtra, as well as South Indian Bank, all three of them, the quarterly update was rather good and the stocks did end well in the green. On the flip side, though, MMFSL, well, it appeared that dispersals were pretty good, but it seems the street was a little bit disappointed on that front because that ended down closer to around 4% on rather large volumes. Metal stocks, they had a good run yesterday, but from the Nifty pack itself, you had JSW Steel as well as Hindalco. Both of them pulled back a little bit, but they can do little to pull back the Nifty. The problem was Reliance Industries and ITC. For majority of the trading session, they traded in the red, and that prevented the Nifty from moving up. Reliance Industries, well, it had a bit of a headwind today because that tax was revised, and that's why, in fact, it was a bit of a headwind for the company in today's session. Insurance stocks, though, they did well in trade. Remember, they've been the big underperformers in the last year or so, but whether it was life insurance or general insurance stocks, all of them did well. Maybe a positive start to the year when you look at taking insurance in under-penetrated sector as well, and maybe you're looking at focusing more on your health. So pharma-related stocks, in fact, did pretty well. You had Sun Pharma from the Nifty pack that was up, Strides was up, as well as Granules. All of them did pretty well in trade today. The power sector has been seeing quite a bit of reforms that are taking place. An indirect way of playing it will be via REC and PFC, and both those two did pretty well. So to wind things down, the global markets have started reopening now, and volumes will get back to normal levels. That's what will give direction to the Nifty. But in the near term, 18,350 could be a bit of a technical resistance level.
Okay, all right, Nigel. Thanks very much for that. Well, let's move on to some market opinion then. Sridhar Sivaram, Investment Director at Enam Holdings, says 2023 will be a tough year like 2022. He adds that it is better to protect capital when macroeconomics are tough.
View for 22 was it's a tough year. I don't think it's changed much for 23. That macroeconomic, data still not looking very favorable for a global bull market. So this is going to be another challenging year. Like we saw in 22, we'll see a lot of ups and downs, at least for the first 6 months. That's our view, at least that's my view, that better to protect capital again in the first 6 months and take a call post that. Financials, our view remains that it's possibly on a sweet spot right now. Big bankers like Mr. Uday Kotak said it's a Cinderella moment, and I don't dispute that, because it's not just the loan growth. Actually, the bigger delta is the credit cost. When you speak to people in the banking sector, they tell you that it's not only the corporate sector which is not seeing the credit cost, even the retail, for whatever reason, strangely enough. In fact, our view is there's a K-shaped recovery. We should see retail NPAs coming through, because if the lower half is not participating in the growth, then there should be NPAs there. We think credit cost is going to be significantly lower. As a result, the earnings growth for banks will be significantly higher. As a result, we will see upgrades in financials.
Okay, well, sticking with opinion, Rana Gupta of Manulife Investment Management says 2023 may be better for emerging markets if there is a rise in capital allocation.
China opening up will mean that some of the monies that will get allocated to China, but consider a scenario where China did not open up and US is raising interest rates and real rates are turning positive in US. That would have been, I think, financial conditions would have tightened much more. China opening up kind of offsets that. So in 2023, perhaps we will have a better emerging market growth outlook than the developed world. And that itself will mean that capital allocated towards the emerging markets can be higher. Yes, some of it will go to China over India. But we do think that overall the environment for the emerging markets looks pretty good with the China reopening that's coming through. I think if you look at the market overall return 4 or 5%, that's of course I think not enough for, let's say, an Indian investor who has a much higher risk, much higher expectation. But I think we need to look a little deeper the sectoral indexes. If you exclude IT, which is I think was down 25%, and pharma, which I think was around 10%, all other indexes were up. Sector indexes were up 15 to 20%, with metals under 25%. So if someone just avoided the IT and pharma or had lower exposure, did much better.
Okay, well, on to the second headline now. Mid-sized banks rose today on strong growth in disbursals and deposits for the third quarter of the fiscal. However, CASA ratio has worsened for most. The updates lifted stocks of Federal Bank, CSB, and others. Abhishek Kothari is here with more details on this.
Well, Federal Bank to begin with has seen strong deposit momentum this time around. So the deposit growth YOY is perhaps the best in last 10 quarters, and on a sequential basis, that is quarter on quarter, it's the best in 7 quarters. YOY, the growth is 14.8%, while sequentially the growth is nearly about 6.5%. They have lost out on CASA ratio, which is now dipped down to 34.25% when compared to 36.4% in the previous quarter. Loan growth remains healthy at 19.1% YOY and about 4.3% sequentially. Remember that in Q2 also they had a strong base in terms of loan growth momentum on a quarter-on-quarter basis. Credit deposit ratio, that's declined a bit to 84.9% versus 86.7% in the previous quarter. CSB Bank has been taking away the shield in terms of gold performance or gold loan growth from the NBFC segment. So deposits are up nearly 19% YOY and about 8% sequentially. The CASA ratio, that's declined sharply to 31.4% when compared to 34.3% in the previous quarter. Loan growth momentum has been pretty strong at about 25.7% YOY and about 5.6% sequentially. This is largely led by the fact that gold loans growth was really robust at 50.8% YOY and about 9.3% sequentially. So you are seeing an increase in the gold loan portfolio share to about 47% versus 45.5% in the previous quarter. So X of gold loan, the portfolio growth or the loan growth is around 9.5% YOY and about 2.5% sequentially. Back to you.
All right, Abhishek, stay with us. Tell us about Karnataka Bank as well as Bank of Maharashtra.
To begin with, Karnataka Bank has seen an improvement in its credit deposit ratio. Deposits are low over there in terms of the growth momentum, growing a little under 8% YOY and about 3.6% sequentially, while the loan growth has been healthy at 12.4% YOY and about 4.4% sequentially. The CASA is up 10% YOY, while almost flat on a sequential basis. CASA ratio has declined on a sequential basis, 31.9% when compared to 32.8% in the previous quarter. However, CD ratio has improved, that is credit deposit ratio is up on a sequential basis. Now, Bank of Maharashtra, over the last few quarters, what you are noticing in its business momentum is that it is gaining market share and better than many of its peers in the PSU banking space. So deposits are up 11.7% YOY and about 6.5% sequentially. Loan growth continues to be impressive and strong, up about 21.8% YOY and 6% quarter on quarter. The CASA has declined this time around, down about 0.7% quarter on quarter. So the CASA ratio has declined sharply, given the fact that other retail deposit and term deposits has grown massively. CASA ratio is down to 52.5% when compared to 56.3% in the previous quarter. CD ratio, that is credit deposit ratio, that remains healthy at 75.4% when compared to 75.7% in the previous quarter. South Indian Bank, the deposit growth is weak. However, CD ratio augurs well for healthy PNL that you can expect this time around. So deposits is up 2.7% YOY and about 2.5% sequentially. The CASA ratio has dipped a bit, 33.8% when compared to 34.6% in the previous quarter. CD ratio is at 77.4% when compared to 76.8% in the previous quarter. Loan growth pretty robust in terms of YOY, up about 18.5% YOY and about 3.2% sequentially. Back to you.
Okay, all right, Abhishek, thanks very much for that. So a long list of banks in focus, but let's move to the third headline today. In a bid to smoothen its strategic divestment process, the government has changed the definition of a government company with respect to the minimum 51% shareholding. Not just that, the government has also eased the 25% minimum public shareholding norm for any listed center, state or PSU-owned company. Sapna Das joins in with the details.
Well, definitely the first aim of this kind of a change in the rules is basically smoothing the process of strategic disinvestment. The government wants to remove all kinds of regulatory hurdles on that path. That's one. Second, of course, it also wants to clarify on the scope of the exemption on the MPS. So both those purposes are served by the change in the rules. So, also let's keep in mind that this basically means that the new rules will apply, or rather the exemption from the MPS will apply even to those companies which have been privatized within a specific time period, or companies which are going to be privatized. Probably IDBI Bank could be one of those examples. For example, the public float of the bank is pretty low at the moment, around 6% odd. You cannot expect the new promoters to step it up to 25% overnight. And keeping all of that in mind, despite privatization, the government wants that dispensation or exemption to extend even to such entities, probably. So that's one. Second, of course, there are a large number of CPSEs and public sector banks which have yet to meet the 25% MPS. Previously also there have been exemptions granted, and what they have in mind is another extension on that front. Probably a 2-year deadline is what the government will be suggesting, but for that a separate notification will be coming in place. As of now, what this does is only changes the rules. The exact timeline, as I just mentioned, will be notified in due course.
Okay, all right, Sapna. Thanks very much for that. Time for a break now. But stay tuned. We'll be back in a jiffy with all of the other top stories this evening.